Welcome to the Ken McElroy Show. I'm your host, Danielle, and I'm here with Ken.
What's happening?
How was your weekend?
Oh, it was great. Of course. Great. It's fun to be hanging out with everybody in the summer.
Well, yeah, because, they're done with school and they're done with work, and it's just a good...
Done with work for a while.
Yeah, exactly. It's true. So today we're going to talk about cryptocurrency. So did you know there's now more worth in crypto than all the U.S. currency?
Is it really?
Yes.
Oh, my gosh.
That's how much crypto's exploded.
Yeah, I'm glad for people. I really am. I personally am not highly invested in it. It's too speculative for me personally. But for a lot of people, I completely get it. I understand.
Yeah, and there are some benefits and then, risks associated with it.
A ton of risks,
Yeah,
of course.
yeah.
And obviously everybody's seeing the benefits. I'm not against it in any way. It's
Right.
just, to me, I hope it goes up,
Yeah, well, and we're just chat about some facts today and some, things people should think about, but we're definitely not against. I have some crypto and we're not against it.
Yeah.
It just is risky to put a big chunk of your investment portfolio
Yeah, that's
in.
the only thing. I see a lot of people that are, whenever I see somebody take all their money and stick it somewhere, it doesn't really matter if it's the
Right.
stock market, the real estate, crypto. It truly doesn't matter.
Right, gold.
I've done this. I did this when I was younger, where I got a stock tip and put a bunch of money. I still remember the conversation and, this is going to be great, and kaboom, gone.
Yeah.
And so there's just times where that's why we diversify. A lot of people don't have that option, and cryptos, they've made it super easy, right?
Right.
With the coin wallet and just.
Yeah. Oh, it's super easy. It took me a few minutes.
Super easy. Yeah, a lot of people are using their stimulus money on it, and they've done really, 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 really well. So I'm really grateful that it's gone up. I'm glad people have made a bunch of money. We're starting to hear people talk about the Bitcoin millionaires or the crypto millionaires. That's awesome.
Yeah. Yeah, the Dogecoin and all that.
All of it's good. Yeah, but it's just it's not for me. It's not investing.
Right.
It's putting money somewhere and hoping it goes up. You can call it investing if you like, and I know you probably we had some comments on this.
Yeah. Joe over here already says he's like it's investing, but
investing. Okay,
yeah.
Great. So then really, so is the blackjack table at Vegas.
Right.
I mean, really, right? Same thing. Putting money out here, hoping that the number goes correctly. And I know it's not a great analogy, but I see it that way. And sometimes I do really well in Vegas, and sometimes I don't. And there are different currencies that are going to fluctuate up and down, and mostly it's based on demand.
Well, and Christina said, if she wants to dip her toe in the water, what crypto? What would you do?
I wouldn't even say. I don't know.
Yeah.
I mean, it's just not. I don't want to recommend a certain platform. It's not my thing.
Right.
I've had a lot of people say, hey, I've made a bunch of money in crypto, and now I'm going to invest in real estate. Because you can borrow against it.
Yeah.
That's different. I can talk about that all day long.
Right.
But I would hate to say, invest in
Give
this
any
platform.
advice.
Yeah. I'd rather bring on somebody who knows.
Is it a little reminiscent of in 2008 when everyone was jumping on the housing market because it was going up? Remember, everyone had like 2 or 3 houses and they would hold it for a few months and sell it for more.
2008, that's going on right now.
What?
Like there's flippers, like flippers galore, people making money and,
But is it a little reminiscent of that? Because I heard the other day I was at the bank and I heard the 2 bankers talking about crypto and everyone's talking about crypto. I feel like it's, trendy.
It is. Of course it's trendy.
Yeah.
100%. Yeah. It's, it's like anything, things become trendy, in the stock market and you could take a look at when they split up gold and turn it into an, electronic traded, and it's basically fractionalized it, and all of a sudden they started selling those products instead of physical gold. Now they're doing it with, I'm trying to remember the name, like trading cards and stuff. I'm trying, what was it called? Anyway, I'm sorry, I can't remember exactly. But, you can take things and sell pieces off. And so all that's happening, and people are jumping on all these different bands. And I have no issue with any of it. But just be careful of at some point that music stops.
Yeah, and I also think something interesting that Jennifer said. She goes, crypto can make you rich potentially, but it won't make you wealthy. And I thought that was a really good thing to say, because it's not an ongoing. Okay, so you make a bunch of money, kind of just like flipping. Then what do you go do with it? You can't just keep reinvesting it. Eventually, the music will stop.
Yeah. I think it's kind of cool though that guys like Musk are saying, you can buy a car with
Tesla,
it, and we're starting to see athletes asking to be paid in it, and I think it's fascinating, and listen, I'm a big fan of wanting everything to go up, and I don't want anybody to crash ever.
Right.
I don't want anybody to ever lose any money ever. I just personally know housing is something that people need. Even the people that are buying crypto, they live in houses. Or they live in rentals or whatever, right? And maybe they're mine. But the point is, I always know that that's going to be there. And so for me, that's my base. It's a real physical asset. Mm-hmm. And I like that. I can drive up to it
and see it
and manage it and kind of control the income personally.
Yep.
If I have a bunch of move outs, and we can do some things to move people back in. If I have customer service issues, I can handle that. I can ride the wave up if there's rent growth, and I can manage it if it's going the other way, like happened during the pandemic. And so for me, I just love that. That's more wealth. Plus, there's massive tax advantages on the real estate side, and we haven't really seen yet the overreaching tax hand around crypto. But I guarantee you guys, it's coming.
Yeah.
Guarantee you, there's people trying to figure out, just like they did by legalizing marijuana.
Yeah.
Just like, I not to compare the two, but the truth is that was a play to make money on it.
Right.
And so legalizing it brought money into the state, and and hopefully reduce some of the trafficking and some of the other things that were happening. But the truth is right now it's money that people are making, and the governments are trying to figure out how to make money on that.
Yep.
Just like they did on the internet. In the beginning of the internet, when people were selling stuff, they were trying to figure out how to tax it.
Right.
And in the beginning, a lot of you might not know this, it wasn't taxed.
Right.
Like, I could buy something from you, and it was like a barter.
Right.
And then slowly but surely, the taxing started on the internet. And so I think that for sure is coming, guys. If you don't think so, then you're crazy, because the internet is worldwide, and it happened already.
Yep. And I think Jim Cramer, he said it best. He said he does invest in crypto, but he takes the fake money and buys something real, like real estate.
There you go.
Yeah.
That's what I'm saying. So what we're starting to see now are people borrowing against crypto, because they've had a lot of people came in at $3,000, $4,000, $5,000. And now the share price is a lot higher, 10x, maybe 12x, 15x. And so people are going, okay, I have a lot of money now. And the smart ones, in my opinion, are saying, okay, let's try to move it into an asset that produces passive income.
Yep.
Which we talk a lot about. And that's a reoccurring revenue. So for those of you, who understand when you buy something and it goes up, that's capital gain. That's, the difference between, buying it low and selling it high, let's say. That would be a capital gain. Then you have to figure out what to do with that money again.
Right.
What if some of the smarter ones are taking that money, not necessarily just in real estate, and they're investing it into things that generate passive income. And what you want is you want to generate enough passive income to be able to cover your monthly expenses. If you can use Bitcoin or crypto for that, God bless you, right?
Yeah.
Because that is what the point.
But to play devil's advocate, it is hard when these coins are going up 10 or 20% a day sometimes to take the money out.
That's why that's why they have all those Vegas buildings, man. I mean, trust me, they're all financed by people that go there. And, and same with banks.
Yep.
So, why do you think their names are at the top?
Right.
It's all based on that exact theory. It's going to continue to go up.
And Bert from YouTube said that's what he's done. He's put a down payment on 2 investment condos from the money he's made in crypto.
So there is something that I think we should discuss. I think that people don't believe that there's a capital gain tax on these loans, on these crypto loans.
Mm-hmm.
So in other words, let's say you start with a little bit of money and you got $100,000 in crypto, and you take $50,000 out as a loan. Okay, I think a lot of people believe that that's not taxable, and guess what? It can not be taxable if it's invested well. But the way you need to look at it is this. Let's say you have a $100,000 condo that you own free and clear, and you go you refinance it.
Right.
That is a loan against the condo, and it's still owed back. So,
and it's tax-free.
Well, it's
right?
tax-free at that point.
Okay.
If you don't pay back that loan from crypto, it's taxable. So it's not a tax-free loan.
I see.
So it's just like a cash-out refi. Exactly like that.
So you have to be making payments, or what? How do you?
Yeah. They charge you 5% against that loan.
Well, actually, no. Crypto loans I was looking are about 12 to 15%.
Okay, I was looking and I saw them at 5.
Okay.
But regardless of what the interest is, so let's say you take that. Let's say it's 100 and you take 50 out, you pay 5% or 15% or whatever. There's a loan against that. It's your money, but ironically, you're paying interest against it. If you invest it into something else like real estate, another asset, then you can write off the interest.
Uh-huh.
If you use it to buy a car or furniture or something like that, you cannot buy off the interest, but it's still owed.
Right.
It's basically like refinancing a condo.
Right.
So it literally is like a home equity line. That's the way to look at it.
And I guess, so as long as it's going up, it's okay, because then as long as your interest that you're earning is beating the interest that you're paying,
it's still owed. Yeah, the way you need to look at it, the way to look at it is it has to be paid back.
Right.
That's actually the whole point.
Right.
So you can take that money out, but it has to be paid back, and if it's not paid back, it's taxed.
And if you take it out without a loan, it's probably going to be taxed.
Well, it will be.
Yeah, it will be taxed, yeah.
So again, you just go back to the original loan. So if you take that $50,000 out of your crypto, and you use it to buy real estate, then that $50,000 is now making money for you over here. You can write off the interest on that $50,000 loan from the crypto side.
So Josh on YouTube was saying, though, that it's also easier for him to get a loan, though, because he can take up to 50% of the value.
Yeah.
So, and he said that, I think he's alluding to, it would be harder for him to get some kind of loan with a traditional bank.
Right. So that's a very, very good point. So let's, again, just going back to the real estate, if you had a $100,000 condo and it was owed free and clear, just like $100,000 in Bitcoin, or crypto, you would go to somebody, and that would be the collateral, and they would give you a loan against that, and they would charge you an interest rate. And again, it has to be paid back. It's not a tax-free loan. You can't just scoop the profits from crypto and go do whatever you want with them.
Right.
The way to look at it is just like a home equity line.
Right.
That's the way you look at it. And the collateral is the Bitcoin itself or the crypto itself. So it's just.
So, I wonder what would happen if the Bitcoin were to go down, if you would be personally liable for the rest of the money.
I don't know.
Yeah.
Well, of course you are. Obviously,
okay.
if you draw against it. Yeah, because now there's no collateral to the person who gave you the loan. It would be inside of those loan documents.
Okay. So just read if you guys are doing this, we're not saying to not do it. We understand some people want to do it. Just make sure you're reading the fine print.
Right. If you don't pay it back, it's taxable.
Right.
So here's another way to think about it. In 2008, 2009, when we had that big housing bust, and I was right in the middle of all this. And as you guys know, we bought a lot of apartments. The people that defaulted on their homes, think of it exactly this way. They got loans for, let's say, $200,000, and their home at one point was worth $300,000. And then all of a sudden, the value of those homes dipped down below the loan.
Mm-hmm.
Okay, so maybe now the home's worth $150,000. Okay, the bank says you're still on the hook for $50,000, right?
Mm-hmm.
We got the loan back; it's only worth $150. Or I'm sorry, the home is only worth $150. But there's a difference between what we gave you and what we got back. You have to pay back that, otherwise it's taxable. So that all
Kevin
happened.
says, "Oh shit."
Yeah. So that already happened in 2008, 2009, 2010. You can't just default and walk away from stuff. Well, you can, and it did happen. But if somebody is actually trying to collect that debt,
Right.
and there's still an amount they haven't collected, it just doesn't poof go away. Then what happens is you actually are going to get taxed on that, because that's income to you.
Yeah.
So that's the negative side of loaning that out.
Well, then there's the other side of, when the crypto investors loan you crypto, somebody else is giving them crypto to loan.
Could be, yeah.
So a lot of them are making anywhere between 15 and 25% on the money or the crypto that they're lending to these companies. But it's just good to know that none of this is governed by the SEC, and you could potentially, if that company goes under and any of the cryptos were to fall, you could lose all of that currency.
Of course. Yeah. I mean, you got to make sure that you're dealing with a company that's been around and has some assets.
Yeah, but how many crypto
I don't
lending
know.
companies
Yeah,
have been around?
Yeah. I haven't jumped into this. But
Yeah.
the same thing happened during the 08, 09, 10 housing crisis. So, there were lenders that went down.
Right.
And a lot of them.
Mm-hmm.
And Countrywide Mortgage was a big one that I remember. And we had done a bunch of stuff. Ohio Savings, I think we had done a bunch of stuff with. And a lot of these got shut down because, think of it, they were lending out, and then all of a sudden their collateral was a lot less.
Right.
It's kind of like what happened during GameStop. There were winners and losers.
Yeah.
And there were people that were shorting and trying to figure that out, and there were losers and winners around all that. So, it just doesn't poof go away.
Right.
If somebody's buying the paper from you or lending you money, then and you can't pay it back, ultimately it comes back onto you.
It comes back to the person that also the people that lended their own crypto.
Sure, yeah. I mean, there could be a chain of people,
Mm-hmm.
but at the end of the day, if the collateral on the loan goes below the loan, you're on the hook.
And it's a big deal that the SEC isn't involved, because they kind of protect investors. So without them, if something were to happen or somebody were to take your crypto, you're kind of on your own.
You are.
Yeah.
Yeah.
So it's definitely something to just think about. Once
Yeah,
again, not
well,
saying to not do it, not saying to do it. We just want to give you a real honest opinion.
I think that if you go on the internet, some people believe that you can just ride this thing up and just keep scooping money out and use it to live. And that's not the case. Well, you can use it to live, but it's owed. Mm-hmm. It's literally income. If you scoop out the money and buy some furniture, buy a car, that's taxed.
Yeah.
If you don't pay it back, right? And if it keeps going up, maybe you do pay it back.
Right.
You know?
Yeah. Yep.
So that's a different issue. But if you're scooping the money out and it keeps going up, the chances of, in my suggestion, I would take that excess and pay off that loan.
Yeah.
With what you already made, because you just want to be, in my opinion, debt free, especially if you're paying 10 or 15%.
So Brad from Premium had a good question. He said, "Do you think that crypto is riskier or much different than stocks?"
Oh boy. It depends on the stock. It depends on the crypto. There's just a lot of scenarios there.
But it is interesting, the correlation of that, because they actually are
it's a
similar
fair
in a lot of
question.
ways.
It's a fair question. It's not in my strike zone.
Okay. So, and Brad also said that real estate is great, but you have to upkeep the property, and with crypto, you don't. It's kind of like stocks. It's easier.
100%. Yeah. Crypto's easy, man.
Yeah.
There's no question that real estate's a lot harder. And,
right.
more reliable, though, I would say.
Yeah, well, it's also governed by the SEC, which as much as, people don't like that, they do keep it a little bit more consistent because of that. So Brent wanted to know from Premium, with the increase in crypto popularity, do you see us heading for a fundamental shift in the way currency is traded?
Well, that's kind of the hope. I think a lot of people are upset around the dollar and, the printing of the dollar and
the inflation,
the inflation and the flooding and so in a lot of ways, we could be right. We could be seeing the beginning of UBI.
Yeah.
We could be seeing the beginning of, I think this is a worldwide issue. The world is kind of reliant on the dollar as the world's reserve currency. So, you got to think of the U.S. as the world's consumer, not, in every way, but, we're buying products from China, from Vietnam, from Europe, and Canada, and they're buying from us too, but overwhelmingly we buy a lot more. So we are literally the world's consumer. We pay in dollars, and so if we're giving them dollars and then we're deflating them, they're upset with us.
Right.
And so there's all kinds of things happening. It's a fascinating subject. You really need to take a look at it. Take a look at it from an Asian perspective, as an example. Let's say you're based in Japan and you're selling something to the U.S. and we keep paying you in dollars, and
it keeps getting worth less and less.
So you're like, screw that, right?
Yeah.
So you have to look at it from the other side, and I think that's what you have to look at. And so they're starting to take a look at alternatives.
And crypto is something that other people are investing in.
Yeah, crypto's one,
around the
but
world.
also different currencies, and so there's all kinds of theories around what might happen, and so it's going to be interesting to see. But it'll be a hard-fought battle, that's for sure. The U.S. is not going to, allow, if they can, another currency to take over.
Right, or Bitcoin.
Yeah.
So, well, we just wanted to, talk about crypto for a while because it was just we're not experts in crypto, but we wanted to give you just our opinions on it, the research that we've done, and just no sales job, just an honest opinion.
Yeah,
really.
And the big thing is to be careful of the loan part.
Yeah.
Yeah, I think there's a lot of people are not sure about that loan part, and just know it's like a home equity line.
Yep. So let's hop over to some premium questions, some real estate questions. So Michael wanted to know from Premium, what happens if rent control is implemented in a city?
Yeah, so it's happened already.
Especially now with everything going on.
Yeah, it's a fair question. It's obviously been going on for years in some markets, New York, California, and then Oregon as a state implemented it. So let me give you a couple scenarios. Would you invest in Oregon right now if they, one, could restrict how much money you could make on whatever it is you owned, and they also controlled expenses like utilities, property taxes, now wages on the other side? So basically they're limiting or hedging your income and doing whatever they want on the expense. Maybe not whatever they want, because there's all kinds of things and all kinds of battles around all of this stuff. But things aren't getting any cheaper, so expenses are going up. And so if they're also capping you on the income side, as an investor, doesn't matter if it's me, doesn't matter if it's Wall Street, that money is going to move somewhere else. And and by the way, I'm not saying that. The word rent control makes a lot of sense, but it hasn't worked. So you have to go back and take a look at, if you get a rent control apartment in New York today, you're paying hardly anything. But the people who are supposed to be in those rent control apartments are not in them.
Right.
You know what I mean? So I think initially it made sense, but it's not the right way to control the better way to do it is to do a public-private policy and work with the landlords. And there's a number of programs out there for that. How do you incentivize both sides and make that happen? Rent control has been proven not to work. And, one more reason to be careful on the Oregon side, basically the government's telling you, they basically have taken over.
Yeah.
As an
Michelle
owner.
said she moved her apartments out of Portland because of that.
Yeah. So, and by the way, I understand the need.
Mm-hmm.
I do. And I understand if I'm sitting around the city and I see homelessness jumping all over the place and rents going up like crazy, that's low hanging fruit.
Mm-hmm.
But it doesn't work. You got to look bigger and deeper than that.
Right. Because if you're not having people investing in the city, then
the real issue is make it easier for supply.
Right.
That's actually the real issue, because the reason why rents go up is because there's not enough places.
Right.
And so
supply and demand.
Yeah. So, but the city is over here going, okay, we don't want any more development, and over here they're saying, and we're going to cap the rent.
Right.
Which is a horrible.
Well, then the
recipe.
people with the money go to places that don't do that.
It's already
then you
happened.
have some development like in Phoenix or other places where you don't have development.
Right.
Yep. Okay, so Bill, next question from Premium. He said, what do you do with your money you're saving if you don't have enough for a down payment and yet feel like you're getting farther and farther behind?
Yeah, so I think that what I would do is take a look at physical metal.
Yeah.
Silver, maybe a gold coin, maybe some silver. Could buy silver for pretty cheap. And, it's not necessarily an investment, but it's a hedge on the dollar.
Yep.
And it's real. It's physical. You can take it with you.
Yeah. And you're talking about real gold and silver, not the EFTs or whatever.
No. I'm talking about literally going down to the gold and silver dealer and buying coins and having them physically.
Mm-hmm.
And think about, an ounce of silver as an example. It is what it is.
Yeah.
And there's a spot price on it for the day. And if you take it into the bank, you can get real money for it.
Yeah. And silver and gold are way up too.
Yeah, they are. And again, I look at it as a hedge. I'm always trying to look for things like that. And as we like to say right now, cash is trash.
Yeah. Well, and also you like to diversify. So you wouldn't go take all of the money and buy silver.
Yeah.
You
so I have silver.
Yeah.
I have gold. I have all that stuff too.
Stock. You have a little bit of stocks.
I do. Yeah. So, I spread it around as well.
Yeah.
I'm not all in real estate.
Right.
I have cash too, by the way.
Yeah. You always want some cash.
Yep.
Dill from Premium wanted to know, how did you learn the basics of investing?
So I wish I could say I learned it in school, but I didn't.
Yeah, they don't teach you that.
Yeah, it was too bad. I studied economics too. So you would think maybe it was just because I wasn't smart enough. But I learned through property management of all things. I started to everything I had been taught or talked about, or in theory, you don't really know until you kind of practically put it into motion.
Right.
It's like when you're training for a job and you're sitting in a room watching a video or reading a manual, and then you go do the job. Like you're like
that didn't work.
Yeah,
that doesn't work.
Or maybe it was. I understand the point of that, but then when you actually go do it, like things start to add up. And so that for me, that's what happened with property management. Is I started to see I was literally paying the bills on things, and I was collecting the rent, and you can kind of see, okay, was there any money after this? And and you start to see, okay, how much did I invest? How much did I make? And you can start to see returns. And
yeah, there's no better way to learn how to invest than to get your hands in there and do it. Really.
Yeah, exactly.
Nice. And then also there's different courses and different things. You have a master course out that will help somebody beginning learn to invest.
Yeah, the master course is a great way to start, obviously, because kind of walks you through how to invest from the beginning, and then how to look for the return, and how to put that whole thing together,
the right property,
how
and
to
everything.
maximize the price and maximize the value. Yes.
And Chelsea on YouTube said that's how she learned. So.
Yeah. It really is. It's funny how, I mean, you guys know, like, it's just like it's like anything. You can watch videos on golf. And that's good, and you can read stuff about it in a book, and that's good. But then, being on a range is helpful.
Yeah.
But then actually doing it, you
right. It's good to start by studying it.
Yes.
But then you don't want to study it forever. You actually want to implement it.
Yeah.
And so, doing like a mentorship or an internship, or Robert Kiyosaki always says, just go work for free. Like it's going to pay in dividends. So if you offer a property management company your free help, or anything like that, you can really learn how to do it.
Right. Yeah. And that's a great segue to, I think to figuring out if it's something that you want to do. If you're going to venture into something, my suggestion is you go find somebody who knows how to do it and has done it, and listen to them.
Right. Exactly.
Yeah.
Right. You got to do a little homework yourself. So
Yeah.
Well, that wraps up today's show. Thank you guys for joining us. We'll see you next Monday. If you want to make sure you can ask your questions, we answer all the premium questions live every Monday. Go to kenmcelroy.com/premium. And we have a code so that you get 7 days free. And guys, what is it? Premium Live. All right. All one word. Thanks, and see you soon.
All right. See you guys.